Thank you and welcome to the stock group. Today is Saturday, June 25th. And let's see what the market did this past week. So you can see here, everybody should be able to see my screen. So you can see here the Dow Jones this week. We were down on Monday, but Tuesday, Wednesday, Thursday, Friday had a big move up. Let's measure that out. Looks like this is about a 6% move for the week. So that looks positive. Coming up to a 21-day moving average. And we broke this last downtrend and actually confirmed on Tuesday. So that's good for the Dow. Next, let's look at the NASDAQ. Pretty much the same, whereas NASDAQ actually was up Monday, where the Dow was not. So if you say, draw this little trend here, we broke it as well. So got 5 days up on the NASDAQ. Let's go to the Russell. Friend, the Russell here. We can see we had took this extra second leg down and it broke down to new lows, culminating last Friday, but had 5 straight up days this week, and we're coming up to the 21-day moving average on the Russell. Then last but not least, the S&P is pretty much the same. So you can see that this is a rally that all the indices took a part of. So you got 5 straight up days. And if I slide this to the left a little bit, you'll see that we had gotten to this area here that we had pointed out last week in terms of the support at the 3,700 level. So we got a good bounce, and it goes back to here, March 5th of 2021. So definitely got a bounce here for sure. We'll see what happens as we get a little bit closer. I will look at this. What is this? The 50. This is a 50-day moving average. So if you see on all the charts, the green is a 50-day moving average. That will be kind of the first test to see what happens. You know, we'll break through these support levels and we get past this 50-day moving average, and then really start to get to a point. If we can get up to this 200-day moving average, which actually is up 3 resistance levels here on the Dow, about 3 as well, a little bit more than 3 on the NASDAQ, 2 on the Russell, and then 3 on the S&P 500. So probably we'll look at the S&P 500 more so than anything. And if you all remember, for months we talked about this 4,300 on the S&P 500. If we can ever get back and get above this 4,300 on the S&P 500, that's going to be a positive sign. But we got a pretty good ways to go. So don't want to celebrate too early, because there's a lot of work still left to be done to get back to that point. And you can see here, we did this before, coming off these lows in May, and we got up to this 4,100 level and rejected and came back down. So this is definitely the first area we need to break through before we get to that 4,300 level. So 4,158, 4,160. Then second level is 4,300. So I'll pause there. Any questions?
Just a quick one. I know this is a bottom. Do you think it is the bottom?
I don't know. So I don't know. I can't say for certain. I'm really not sure. So let's look the only thing I could say is you got a lot of volume here on this Monday, right? So you have to go all the way back to March 18th to see that kind of volume for that one day, right? So confirmation, of a reversal here at the lowest point on a chart in recent history, confirmed with some volume. I can say this is a bottom for now. I don't know if I will say it's the bottom. I know it's probably a cop out, but I'm really not sure. And I tell you what, the test is 41.66. I think if it breaks through here and it goes higher, we can probably say it may be the bottom. But this is the line in the sand, I believe. Because you look, so let me draw this. So if you see here, we got to this area before. We see we were there again in March, touched it again in April. So where it was support here in March, the same area was support in April. It actually became resistance in June. So we're going to have to clear this. So I think if we can clear this area here, but to me, the bigger part, until we break 4,300, I don't think we can say for sure that that's the bottom, because we may get up and down again. So I know it's not a definitive answer, but that's the best I can do there, Milt. Anybody else want to care to venture to answer that question? All right. Let's go. So let's look at, well, Milt made a request when we got on. Are people selling out of their retirement accounts, say in the last couple of weeks? How many people are liquidating their accounts or going to cash in their retirement accounts because of the pain? Okay, I'll take silence as no one. All right. So let me ask this. Has anybody just stopped buying? Did they just start taking their future allocations and just going to cash? Or did they stay the course and just kept buying? All right, no takers. So this past week, I actually had a little bit of cash in my 401, and I moved it over from cash into our S&P 500 index fund. So I think it's maybe 3%, 6% or something, but it was real small. But I did move it over. So got a little bump. I think I did that maybe Tuesday or Wednesday, I believe it was. So I got a couple of days of some appreciation. So happy about that. Put that little cash to work, and still just, dollar cost averaging. And so we'll see how that goes. Let's look at some of the big names. We'll go with, you know what? We usually do big caps first. Let's do small caps first. Let's do some small caps names. Let's see. Let's look at Chewy. Chewy is on a nice run here. You can see Chewy doubled. I was about to say double, but not quite double. But Chewy's up. What's that? 50% off of the lows here, for sure. So Chewy hit a low of 22. Now you see they broke through this first level of resistance here at 36. So Chewy's on a nice run. Let's see. Let's look at ARK. Milton mentioned these yesterday on a text. So these are the ARK funds, Cathie Wood's funds. So let's draw some trend lines here. So you can see here, ARK had been in this descending triangle down. You can see that they broke it. The trend here went up a little bit, went sideways, came back down, and then they started. Actually, this run started a little bit early for ARK because it started actually last week. So these are the 5 days this week. So actually last week they tried to start a little bit. Looks like this last week, Thursday. But you can see here, you got this shelf on ARC right here at this 46. But if the market continues, it should easily break through this little top. And what I mean is top, if I draw it right here, you can kind of see that shelf there. So if it can break through that, that's going to bode well. Then you got support at this level. You got some resistance probably right in here. And so this is 21-day, this red line, the green is 50. And then the 200-day is back up here at 72. So, and let's look at the other funds. They look pretty similar. Most all of these, the chart looks pretty familiar. Well, pretty similar, should I say. All these are these Cathie Woods funds. They all begin with ARK. So, all right. And all those are small cap names, growth names. Let's look at a few others. Let's look at APPS. So APPS really hadn't participated that strongly in this bounce. They got as low as 14.45 and only at 17 here. So they haven't participated that well. Let's look at our friend Fubo, this piece of junk. Yeah, Fubo is trying to find something off of the lows here of 250, just getting back up to $3, 295. So they really hadn't done much. So you can see, we had a broader market average on a Russell and a Dow. We showed about 6%, but you can see here, it's less than 6%. Well, let me measure it. I could have it wrong because these are such small numbers. Oh, okay, so I guess not. So it's like a 24% run, but it looks very narrow, but it's because the stock is so low. So let's pull it up. So you say from the bottom to where we are now, last 4 days, so it's up 21%. So it's actually a big move, but the stock is so cheap. So let's see what else. I sold this, by the way, milk, and I think I ended up buying some S&P 500. Let's see what else. Trying to find another name here that I was.
One thing you could do on a stock this cheap
Mm-hmm.
is like maybe buy a out of the money option, probably for maybe 50 cents or so, and just see if you can regain a little bit money on that because of the way it's looking right now. Those gaps up and everything.
Yes, sir.
Even though that Friday did not look particularly good.
Right. No, I would agree. Well, again, let me see, look at the scale on it. But yeah, I would agree. Friday didn't look like a sideways day where the market was crushing. So, but I think they got a lot of short interest in the stock, so it's probably got caught in that as well. So I think these shorts are in it. Now, I think it's like maybe 3 days they'll have to work off in terms of the short interest. I think I read that somewhere. So it's going to be interesting if they can break the back of some of these short sellers and make it an actual decent pump there. But yeah. So you say look at an option on that. I'll take a look at that for sure. Let's see, Robinhood. You can see here off of the lows this week. They actually gave some back on Friday, but 22% off of the lows on Robinhood. Let's look at CCL, Carnival Cruise Lines. They actually had a big day yesterday.
They're coming off earnings too, and they had pretty good earnings. I think bookings had doubled on it.
Okay, so that's a good sign. So yeah, they're up 23% off of the lows. So it's a good move. Let's look at let's look at a few airlines as well since we're here. Yep. So I was actually in the airport this week. Travel is picking up. Travel is picking up for sure. Airline travel, that is. So you can see here, got a decent bounce here. American Airlines. I was actually on Southwest. Let's see. So Southwest. It's a nice run on Friday. You can see up 9% off of the lows of this week. Let's look at Delta. So let me point out something here so that you can see whatever happened June 1st through the 7th, you can see that we were definitely in a downtrend, right? So I'm not sure what happened in this area, but you're in a downtrend here. Now I'm going to compare this with oil. You would think that, so this is June 7th. So you would think that the airline stocks would be doing opposite of what oil was doing. But you can see that oil had a big pullback from June 8th, whereas, is it the XAL? I don't know what the spider is for airlines. Let me see what the airline spiders are. Hold on.
Is it Fly? I'm trying to think. I know it's either Fly or Fly is an airline. I can't remember which one.
Yeah, I'm not sure. I thought I had it in here. Let me see. I'm just going through. I thought I don't know. Let's look. Let's see. Look at the indices. Airline benchmark. I thought they were. Okay, yeah. XAL. That's the one I was looking for. Oh, I had it. I just went by it and I missed it. Yeah. So you can see here that oil and airlines were in tandem up until this week, and the airlines broke out. So I don't know I'm not sure why that they were kind of in tandem until they broke out this week and the airlines reversed, but oil did not, because fuel is a big input cost for airlines. So as fuel is coming down, you would think that the airlines would be bouncing off of those kind of instantly, but maybe not. And it could have something to do with hedges that the airlines may have on. So we are seeing a little bit of bounce here in the airlines. Let's see. Since we're talking about oil, let's look at some more oil plays. PSX, Phillips. You can see here still continue down this move in oil. Yeah, so they're killing this oil trade. Let's look at Gush. It's an oil ETF here, getting killed. So it's saying, you can see it started here June 8th, and they just been selling out of this oil trade to the downside. Actually should be support right in this area, at least first level support. Be interested to see what happens if it breaks through and continues lower or not. It's Chevron. Same here. So still sell off in the oil trade. All right. Let's see a few more. Actually, Jumia, this is they call this the African Amazon. It's called Jumia. It's a little small cap stock. You can see that they offer these lows back here off of May 12th. And you what 451. So you're looking at about 40% move to the upside here. Yeah, 59% move on that. So Jumia, let me chart this up real quick. Yeah, so
Mike, I never heard of that one before. Are you following this one?
yes, I've been following this one for a good while. Actually, I owned it back at this level back in here, and I sold it too early, and I didn't catch all this run up to this 40 something. I was doing cover calls on it, and it got called away from me, and I never got back in it. So, and I ironically, I got some cover calls on it now. So yeah, so this is Jumia. So you can see here, we're at these lows. Didn't hit these extreme lows back here that we touched in March of 20, but we did get to the second level here at the 445 level, and you can see that we bounced nicely off of there. If you look at the moving day, at the moving averages here, we are above the 21 and getting very close to the 50-day moving average. We break the 50-day. I think that's going to be good. But to me, we got definitely some horizontal support areas we need to clear. So we need to clear this 806 and then this $10 range. And then if we can get there, clear this 50-day, then you got another resistance point here at 1266. So let's look at that and just look at those earnings and see what those earnings look like. So here we were, so revenue was 43 million, but they were still losing money. Excuse me. 41 million there, 52 million here, 48 million. Yeah, so they're growing in revenue, and they're doing a little bit better in terms of decreasing their earnings loss. So it looks like just 1 cent a share. So, and you can see some good volume right here off of this earnings number. See a lot of volume. So you had average volume at turn this off. Yeah, average volume at 7 million shares, and this day alone was 20 million. So you had almost 3 times the volume off of this earnings. So, and you have to go all the way back here to this April 4th, where the stock was $11 to have a volume day that large. And then the one before that, stock was up at $12 to have a volume day that's similar to what we experienced on May 17th. So, and if you're looking at playing this, you can say, hey, put your stop in at 661, give you about 50 cent stop loss on it, you know, if you're just playing it for a trade. So that's Jumia. Let's see. Let's look at Magnite. Don't know what's going on with Magnite. I thought that they would have participated a little bit better in this rally. So you can see they're coming off the lows here of last week, of $9 up to 10.65, but they put in a lower low probably about a month and a half ago here at 8.61. So they're still in this chop range, but you can see that they're, even in terms of the descending trend line, they broke it, went up, went sideways again. So if you can say here, it's another trend line to the downside that broke. We got this one to the upside, And so you still got to get back through this area here. So if you say this is a shelf, you got to get back and close above this before we say anything is really solid here. So they're going to have to close above this 1169 and then this 1274. But then there's a lot of head. So really on this chart though, you don't really get any significant. I mean, you do in terms of here, you can be early at this, you know, even if you bought it now, right? So you say 1087, you got to break this 1170, then it's 1278. But the real piece here is, and I'll extend this over, is this area. It needs to break this 14, the 15 area. But even if it got here and rejected, so you can treat this as a trade if you were going to play this, right? So you can say, hey, if it gets back up here to this 1502, the likelihood of it rejecting is high because you got 1, 2, 3, 4 areas where it rejected before at that area. So you may, you know, this could be a trade candidate for somebody that's looking at it. So that's Magnite. Go through a few more small caps. NNDM. This is a 3D printing stock company. It's one I've been buying all the way down. They got, so interesting about this company. So anybody got an electronic device, you have a circuit board in that electronic device. That's what all the electronic components sit on. What they're doing is they come up with 3D printing technology to be able to 3D print a circuit board using their technology. And it's supposed to be a game changer. It's just that they haven't really gotten picked up by Wall Street yet. One interesting thing though is that this company has, I think, $4 or $4.50 worth of cash, and they're trading at, you know, $3.27. So they got more cash in the bank than they do what the stock price is. So, and that's a per share, because I think they got like $1 billion in cash or something, because they did a lot of raises in the last 3 or 4 years, secondaries. So we shouldn't have any, you know, so Milt asked a question a lot about these where it says, are they going to need any money going back to the capital markets? For this one, they will not need any money. They're undervalued, and they have a good story. So if this thing ever catches fire, it's gonna do well. And you can even see here, off of these lows of 216 to where we are. I mean, this has already been a very good move here. So if you measure this out, you're talking a 48% move in literally, was that a month? May 12th, what, a month and a half. Yep. So an NDM. Let's see, one or the other. Here's our friend Milk, PLTR. What did you do with this, Milk?
I'm still holding it. It's interesting enough. I think Google became one of their clients. I think last week I read that. I can't remember when.
Really?
But that told me that there ain't no way I'm selling this baby now.
Right. I've been adding to this. I've been adding to this name. So I think I bought a little bit. But if I didn't buy any this week, I bought some within the last 2 or 3 weeks. So yes, I've been adding to my PLTR for sure. And actually, this is, if you see on the chart here, we got lowest is 667. Broke through the 21-day moving average here at 881. Broke through the 50, which is a good thing. So I don't really use moving averages on the chart as much, but I'm probably going to start incorporating them a bit more. But moving averages, these are things that that like institutional money, they look at these averages a lot. Particularly the 200-day is a strong moving average. Now, on certain stocks that may not have a lot of Wall Street following, but if you look at a moving average, like on one of the big indices, you'll see that, you know, this line a lot of times, particularly the 200, shows where risk is. So when you hear risk on or risk off, risk on means that, you know, they're buying, they're putting more money in thinking that the stock market is going to increase, whereas risk off is just the opposite. They'll start selling. A lot of times the 200-day moving average, and sometimes the 100, so it just depends. But the 200 one is followed closely by a lot of not companies, but by the market participants, the traders and investors. Let's look at Roku. So a lot of people know Roku, maybe have a device in their home. We actually have a Roku from my mom's TV. So Roku bounced. So actually you got a triple bottom here in Roku. At the 75 level, Roku is at almost $100. So it's a nice little run here. What's that? It's about 25%. I know it's almost 25 points. Was that about 35% move off the lows? So good move on Roku. And if Roku can break above this shelf here at kind of a shelf here at 105, but I would move it up a little bit more to that's probably here. If it can break through this 111, you got clear selling from 111 to probably 140 on Roku. So, and again, all of this is predicated on the market continuing to go higher. We talked a little bit about that earlier in terms of is the bottom in or not. I think Brenda is playing SoFi. SoFi, it's not as strong as some of the other ones, even though it still has broken out. This week was not as good as some of the other stocks, small cap stocks. You can see here where all the indices we were up 4 days, at least 4 to 5 days, whereas SoFi, they had 2 down days on Tuesday and Wednesday. So that's not good in that respect, because when the, you know, if the larger market is doing something, you want your stock to be doing what the larger market is doing. And if it's doing something contrary, and particularly if it's going down when the market is going up, that's a negative sign. So don't know what's going on here with SoFi.
Mike.
Yes, sir.
If you see that Friday action,
Yes.
the volume and that gap up.
Yep.
I think that looks pretty good there for it. But look where it stopped at, though.
Oh, well, yeah, it's right. Start right there. But now it could be okay to that point, Bill. You got a lot of people in here that have tried this before, right? So if you take each one of these points, so you say, hey, they were rocking this, looking at this as support. Here, that support gave through right there. Then this was resistance, broke through resistance here, got way up here, only to go down, touch it again, second point, and gave it back up. And so you got a lot of sellers trapped in 2 different levels here. I mean, I'm sorry, I won't say sellers. You have some people, if they didn't sell, some holders that either are trapped here or trapped here if they're just holding. And so now you don't know if there's just some apprehension at this level again or not. Now you definitely got buyers coming in, right? So this is the first time that we broke above what this is, 87 million shares. You got to go all the way back to here at 125 million shares on May 10th. And this was on earnings. So it's going to be interesting to see on SoFi. But you're right, Milt. But one day on that gap, now you might gap and go like you did here. You may get a run. So next week should be interesting on SoFi. You know, it might be something to take a look at to see if this trend can continue higher. But I will be looking at this in conjunction with what the Russell is doing, Russell S&P is doing next week. If we get some continued run in the Russell or the S&P, then SoFi should follow suit. Let's look at Square. Square was getting killed like everything else, but got a rebound this week. Now, this is what I would have expected SoFi to look like. I would expect it 5 green bars and some large green bars as well. So if I go back to SoFi, just as a comparison, we got a couple green bars, but you got these 2 down days. Whereas on Square, you don't have any down days this week. And it's much more it's much more of a bullish chart here based on this week in Square. Bouncing off the 55 lows here in Square. All right. STNE, this is one. This is interesting. This is a Brazilian payment processor. They do think of them as Square for Brazil. This stock is falling so much, it's incredible. I have to go back out to a monthly on this. This is how far this is falling. This was a $90 stock in February of last year. It's $93 stock, and it's $8 now. So they got a long way to go. But in terms of kind of where they are now, I'm sorry, let me make this big again. Coming off the bottom, got a lot of volume here. So you got to go back. You got to go back all the way to March to see volume at this level. And that was volume based on earnings. You see, they came out with earnings. Earnings did well in March. Also had an earnings bump here in June. And it's even from there, it's down probably 40% from this earnings high here. Well, probably at its lowest, it was, almost 40% down, but it's recovered some of that to where it's just down 29%. So STNE, maybe a look. Let me see any more small caps. Nah. So let's look at some a little bit bigger names. Still growth.
Question for you, Mike.
Yes, ma'am.
Any of you guys have any clue what made Shift just have a 30%, 50% day this week?
Shift. What is
SFT?
I don't even know what Shift is.
It's the same as Carvana.
Oh, it's an auto selling cars. Yeah. I never heard of it before. Let's see if we can see some news here. So CarMax, Carvana, and Shift Technology poised for gains as near-term challenges subside. So had a mixed shelf offering. Oh, so that's old news. That's April. Yeah, so we got to go somewhere else, find some news from yesterday. So one thing you can do is I don't know if you're all familiar with this, but StockTwits. This is a message board kind of thing where you can go out if you want to find out what's going on with companies and what people are saying about it. That was SFT. So let's see. Let's see what they're saying. So Swift Technology receives average price target. So it looks like their price target was raised. But that was 6 days ago. So still not even yesterday. So let's look at what the comments say. Last time got a bonus, disappointed here. It's about to blow, not sure. Okay. SSFT is added to the Russell microcap. See, solid week in general. New highs. I don't know what this, let's see. Let's see. Form 14A. Yeah, I don't know what this Form 14A looked like. Okay. Cash award. I don't know if somebody bought some, was awarded some options or something. You have to read through that, but definitely some earnings, price targets. But I don't see anything specific in terms of what happened yesterday.
All right, no biggie.
Other than them being, well, and this may just be it, them being added to the Russell Microcap fund. That could have been the big thing. That's what, to me, that's what would make a difference. Because what happens if you get added to an index, every fund that tracks that particular index or has a similar type of index, they will have to start purchasing that stock. So that could be the move for that. And people are saying, hey, we know we're going to have fund flows into this because they've been added to the Russell Microcap. Now, I don't know how big the Microcap index is for the Russell, because this is not the regular Russell we
But
talk
nothing
about.
you saw with Carvana or anything. So I was
Now, I don't know.
so
I don't know. Let's look. Let's see. Did Carvana have a crazy day yesterday? Let's look at the chart. Let's go back. No, so Carvana didn't have a big move yesterday. And then what was the other? And look at CarMax as well. Now, CarMax had a big move yesterday. Now, I don't know if you get some of this as well. So CarMax had earnings yesterday, right? So earnings must have been good. So they surprised 2.75% on earnings on revenue to the upside, and 5 cents a share earnings surprise to the upside. So sometimes you get sympathy of others in your space when one company does well, because they may be using that as a forecast. So I don't know if Shift has gotten a boost because what CarMax has said, or not. But I tend to think it may have more to do with that microcap deal, because that's going to put demand pressure on that stock, because again, funds are just going to have to start buying it. So, but could have had some of this as well. But I've never even heard of Shift before. I never heard of it. So it's you know what? I'm gonna add it to the watch list. Yes, ma'am.
the other crazy thing that happened this week was Revlon, but I'm assuming Revlon's crazy move is similar to like the those others that were going bankrupt and people just started buying them for crazy reasons.
This is a
Yes,
1% meme stock right now.
Yeah, there you go. That's what I was assuming. It was just falling into that category.
I had not even heard anything about Revlon, but we can draw this. But yeah, you can see the volume went through the roof starting June 14th. So what was that? Was that last week? Yeah, so starting last week. Yeah. So yeah, but stuff like this, you got to really be careful, because as quick as you saw this go up in a matter of days, so yeah, so you're talking what, 700%? Well, not quite 7, but 600% gain in 2 weeks. It's unsustainable, right? So if you're buying here, you're playing with fire.
Oh no, I wasn't interested. I was just wondering what the story was, but I figured it was like those other guys.
Yes, some banks, so they say continue post bankruptcy gains. So they must have filed for bankruptcy and trying to fight their way out of it. Just looking at what that one headline said, we'll have to dig some more to figure out what their story is for sure. But from 16 to $1, yeah, it's huge. So let's see. Let's go back. So that kind of wraps it up in terms of some of the ones we look at for the small cap. Now let's look at some of these big cap names. Let's look at Boeing, our friend Boeing. So Boeing, this is not good. You can see here we got a strong week in a Dow, but Boeing only had 3 days up. He was down. Looks like that's Wednesday and Thursday. I'm sorry, not Wednesday and Thursday. Thursday and Tuesday and Thursday. Whereas I would have thought Boeing should have, had a better participation up here. So looks like we got some resistance right here at this 142, 144 area. Got to see if we can break above that on Boeing, but had a nice day yesterday for sure. It's a 5% move yesterday. So that's good. Let's go to Apple. So you can see here, Apple hit a low back here at this 128, 129 level. Was that? Yeah, 120. Was that 129.04? Yeah, so Apple had a nice rebound here. So I've added to Apple recently. Let's look at Amazon. Amazon had a nice move off of these lows, triple bottom here at this 102 area. Back up to 116. So a nice move yesterday, up 4%, $4, up 3% yesterday. So that's good. Let's see. Remind me, I want to come back to the banks later. Let's see, let's look at Caterpillar. So they had crushed these commodities stocks or commodity related stocks here recently. This looks like the same thing that happened to oil, but you're getting a bounce here. Right here at this 180 level on Caterpillar. Let's see. Caterpillar, should I say, not Caterpillar? It's terrible. So next area of support, 170, 150. And maybe you could say this 156, but I won't draw that one there. And right here at 140. So it's Caterpillar. Let's see. Oh, I forgot this one. Let me show the CLSK. This is back on the small caps. This is a Bitcoin related stock. You can see this thing has gotten killed. But had a little bit of a double bottom here at this 460. But you got a little reversal here on CLSK. Let's look at FedEx, big cap name. This is actually pretty bullish here on FedEx. You can see here we got it's like a 5 or 6 time bottom here. So look at this range here. FedEx off of the $200 level was huge. So let's look at UPS as also in that same vein. UPS hit this low here, 165, and low of last week of 169. And you can see UPS participated well this week in terms of the rally that we had, this little small rally that we got. UPS looking good there. Let's see, UPST making a little bit of turn here. Participated pretty decently on the rally of this week. This is a small cap. I know I'm jumping around a little bit, but I saw it. I just want to talk about that one. Let's look at Netflix. Netflix is coming off some lows themselves. You can see Netflix touched this 165 level last week. Netflix had a nice run. Had a down day on, looks like that's Tuesday, but Wednesday, Thursday, Friday was good. Netflix is It's making a run off of these lows of 164. That's nice. Let's look at Nike. We talked about Nike off of this 100 level. I know Milt had pointed this out, so you can see this area here. So you got a triple bottom here. So Nike was good. Now, but this is a little disconcerting because you actually had a gap down from Wednesday to Thursday. Don't know what that was about. But Nike's coming up, and you got earnings next week. So it should be interesting to see what Nike does here. Netflix, let's look at Facebook. Facebook, actually, it's kind of strange. So Facebook actually hit an all-time low on Thursday, actually, before it gapped up. Don't know what this is about. Don't know what this is about. Anybody been following Facebook, following the news here? Okay, don't know what that move was about. So Facebook is lower lows this week at 100 and what's that? 154 on Facebook. Let's look at Google. Google is still yet to split. I think they split in July. Google had so this is good move. Google is following the trend of the broader market. You can see that had 5 straight up days this week, coming off these lows about a month ago, May 24th, put in at this 2046 level. So Google is still doing well in terms of this bounce off of these lows. All right. We did Amazon, Apple, Google.
Isn't Google split gonna be in about the next couple of weeks or something like that?
Yeah, I think they're in July. Milt. I think it's July. Let's see. Yeah, we'll execute a 20-for-1 on July 15th. Yep. So there we go. So that split will lower the price from roughly $2,300 to about $115. So you see, yeah, so we're at 23 and some change. So 115, 116 area on Google. Yeah. And if Google can get above this, and actually this close above this, this 50-day is good, but really Google is going to need to break above this 2459. And then see if we can get back above this 200-day moving average at 2520 on Google. So I'll pause there. Any questions or anything on these big cap names? And it's open to anyone. If there's a particular stock you want to look at, I'll pull the chart up and we'll talk about it.
I wanted to talk about something for people to look at. The first one is SCCO. The reason I brought that up is the reason this stock is like this is because of recession fears.
Okay.
I think a lot of people call it Dr. Copper. When you see copper collapsing like that, that's a good sign that we're heading toward a recession.
All right, let's look at another copper name there. See how it's doing. Pretty much same chart. Yeah.
Yeah. I think you're going to see this for all the commodities. Because remember, we talked about this before. When the dollar is strong, commodities tend to be weak.
Okay.
Also, a strong dollar is not good for anybody. If you're in a poor country, since everything is bought in dollars, if it costs a lot more to convert your currency to dollars to buy something, then you really know what inflation is. This stuff we're having, we just think it's inflation. So we have recession fears, and that goes back to what you were saying. You want to look at the banks. All
sir.
that's going to tie in together.
Thanks for reminding me because I forgot, Milt. Yeah, so here are the banks. It's JP Morgan. You see they hit this high back here in January of last year, and it's pretty much been a free fall. Broke this, got a little bounce here, sideways. Then they shut the door on it, and then we're at all-time low, well, not all-time lows, but lows going back to, what is that? November of 2020. So that's JP Morgan. Let's look at Citigroup. Well, what's crazy about this though, Milt, is that the feds are raising rates, and you would think that this would be good for the banks. You actually got a triple bottom here on Citigroup here at this 47, 45, 44 area. So triple bottom here. You would think this would be good for the banks because as they lend money, they can charge more. So you would think that they would be doing better in this higher interest rate environment. So it's JP. Let's look at your buddy, the ones you don't like, Wells Fargo. Yeah.
Oh, they got caught doing something crooked yet again.
Oh yeah. This it sounds like they can't get out their own way. But yeah, so you take. Sorry, wrong tool. So we continue just to see here, pretty much the same thing. Got this little break, retrieve, and then flush down. So you got a double bottom here at this 37 and change area on Wells. So we move this up here. It's a double bottom right there. It goes all the way back to February 2021. Yeah, you know what? I haven't really talked much about Goldman Sachs. Yeah, they're getting killed too. So it's, you know, all this is pretty similar in terms of what's happening with these banks. But again, it's a little bit surprising that they can't find a you know, with these rate hikes, that they can't find an area to recover from. So
The issue is recession trump all. All this pain people have been having. If we go into a recession, we're looking at maybe probably 30% haircut from where we are right now.
Mhm.
So I mean, think about that. It's when you look at tech, it's going to probably be more like 50%.
right.
So it's more dynamic. So you got to think in that context. So the banks, yes, they can make more money, but who wants those loans?
Yeah. Yeah, you got a point there. Got a point there. Like what's the demand side for this? And then two, you know, another thing that we talked about before, Milt, and as you were saying that, it just kind of came to mind. That is, they still have to deal with this Russia overhang, right? This Russia default and what that's going to look like.
The slow moving default, they still have defaulted yet.
Yeah, but they could be that, you know, they're trying to get out in front of it, right? So it's going to be interesting on that. This is actually a Clorox chart, and so Clorox has been in a extreme downtrend. You know,
I would look at something like Kellogg's more than them because they got caught up in the pandemic, and they just went up way too high for what they are. So I could see where the money would come out of there.
Well, but you got to remember though, they also got another piece where they're able to charge more because of this wheat shortage, right? So they might just be passing all those costs on to consumers, because with Ukraine supplying the world, 70% of the world's wheat, these cereal makers, they are, it looks like you're passing these costs on. So they've done well since March, so, which is pretty interesting. And here you can see that they were definitely in this trading range for a good bit here until they broke out above. So it's
Yeah,
interesting.
the reason I brought this one up is because it's gonna split into 3 different companies. I really haven't gone in depth in that, but it could get pretty interesting. I know one of the companies is almost guaranteed to get bought once it's split.
Okay, let's see what that is. Spin off face tough environment. Trying to see what they're gonna split. Okay. Gonna split into North American cereal, plant-based business. What's the other 3? I'll say, okay, so
I think it's gonna be something like cereal, plant-based, and snacks.
I was looking for that third one. I was like, what is the third one? Okay, snacks. Okay, yeah, global snacking. Yeah, I missed it. Okay. Global snacking, international cereal and noodles. Oh, as well as North American frozen breakfast food. A separate cereal company in North American and Caribbean regions we set up, while our third division will be house plant-based foods operation. Okay. Interesting.
The more I look at it, all 3 of those would probably be candidates to be bought. So, if you don't have a high risk tolerance, this could be something to give you a little bit of money.
Yeah, what's that? What is it trading at here? Go back. $70. Okay. Let's add it to the watch list. So we can track it. All right. Anybody been looking at this Zoom trade? I should be. That's what we use every week for the call. They got as low as 80s. It's up to 123. Yeah. Nobody else should be buying it. I should be buying it. So I'm giving them my money every year. It's interesting. It looks like they got and they have to break out of this. Next resistance 135. Okay. Let's see what this retail trade is looking at in relation to the recession discussion. You can see here Walmart got a little bit of rally off of that horrendous earnings report, came up, gave it pretty much all of it back. Now this week trying to rebound a little bit. So it's Walmart. Let's see about Target. Probably it's pretty similar. Yes, it is. Actually, they went even lower. They took out the lows of their earnings. Actually Monday of this week. So I guess they got to work off all of that inventory. Let's see. Let's compare them with Dollar Tree, Dollar General. Yeah. So Dollar Tree actually had good earnings. They're giving some of this back though, off of these earning highs. Let's look at Dollar General. Actually, Dollar General is looking good. They're breaking out to newer highs off of this week's rally. Dollar General. Wow, that's crazy. Let's see something.
Ollie's actually is still running. I'm trading on that this week.
Is it? Okay. So you've been trading it this week?
Yeah.
Okay. Oh yeah. Oh, Ollie's. Oh yeah, Ollie's still rocking. That's That's good. And this is a weekly chart here. So you look at the daily. Yeah, Ollie's just continuing this, extending this run that they're on. Yeah, so this is only had a down day Wednesday. Yeah, but Ollie's rocking. It's gonna be interesting to see if they have enough to continue higher, given that this is next level support. And you probably got some resistance. Resistance here at the 63. They can close above 63.51, and then again it's 70 level. Actually, I might even move that one up a little bit to the top of that. So this 73, and then this 76, then this 82 on Ollie's. See how much. Oh, Ollie came out with earnings, so they're continuing their run off of earnings. So, all right. Hadn't really
But like
talked.
you're saying, yeah, I just don't know how much steam it has left in it, which is why I just traded it this week.
Okay. Yeah. But it's been rocking though, for sure. It's been rocking for sure. Let's look at this NVIDIA. Really ain't talk much about it. NVIDIA double bottom is actually, as well as the market did this week, this is not really looking that good for NVIDIA. You would expected them to do better this week. Only really participated well on Friday. So, and then, you know what? Just say that. That's Texas Instruments. Still in it's not doing that well. Let's try this. So again, as you see, I'm drawing these peaks and valleys. I don't have to draw them out. I'll just show you how I'm drawing them fast by hand. So you see the brush. So you see I'm taking those peaks, that peak, that peak. I'm basically taking those three and just splitting it and just drawing that one. So I'm not really drawing those two lower ones. You got this peak here, but you got a bunch of congestion here. So I really skipped that one. But then you got this bottom, this bottom, this bottom, this bottom, this bottom, this bottom, and it correspond with this peak here and this peak here. So I just drew this one horizontal line there to represent those. Bottom. So you got these two bottoms here, this bottom here, this bottom here. And so that's where this line comes here. And then I'm gonna take this bottom here and this peak right here and connect those two together. So, and actually didn't put it in the right place. Let me move it down. I meant right there. Yeah. So that's our support and resistance on this Texas Instrument. So you can see that they're in a downtrend. But got a bounce here off of 148. So given that one, I know one of their competitors is Qualcomm. Let's see how well they're doing. Pretty much same chart. Actually, you can see here they're off of this quadruple bottom, actually 6 times, whatever 6 is. And actually broke it even a little bit lower here at this 118. But you can see here this doesn't bode well for this week. So semis must not have done good for the week. Let me look at the index real quick. Is it XL? Was it XLK? And I gotta find out what the semiconductor. Oh, it's the Philadelphia Sox. Yep. So yeah, you can see here that the Philly semiconductor index didn't do that well for the week as it relates. So you got 2 down days, and then even last Friday. So they didn't do as well as the overall market did. So when you look at the Russell, Looks like my network froze here. Yeah, so when you look at the Russell, the S&P, and so yeah. So semiconductors not looking well this week, so they really didn't participate. So that's look at this last category. Now this is interesting actually. This is MasterCard. So you can see MasterCard got a bounce, but MasterCard got back down to these lows of 306. So we saw the last few times that this happened. So actually I can draw this over. And if I pull it down, you can say you got one. So you got a couple of ranges here. So let me draw this as two different ranges. I can take that one as a range. And then you got 1, 2, 3 off of this bottom. And let me just draw another color here. So you take this current range here and I'm gonna change the color on it. So you can see this kind of turquoise green here. Got 1, 2, 3, and you can see we're in this fourth range. So this trading off the 306 to the 330, over the last, 6 months, you had that trade 4 times. And then you have some continuation from the 330 up to the 366, 1, 2, 3, 4, 5. So, you've had these ranges that go through. And so if you count even the larger ones from the 305 to the 366, you had that one time, had it again here the second time, and you had it from 313 to that 366 again the third time here. So definitely a range for this, and you got a range within a range on this MasterCard. We're definitely trading. So right here in the middle of this. So if this continues, you may get this next leg up from 330 to 365. And if this continues to track, and if you have a strong NASDAQ or S&P, we may be able to get that back up to that 365 level. So that'd be another 10% or so move up to the upside on MasterCard. So, and you can see here, this is this Marathon Oil. You say they're giving up the ghost in this this oil trade. So, and it's coming up to now. Here's an instance where this 200 moving day average is going to be significant. If this closes below the 200 moving day average, and then even the larger, if I go out to the OIH, let's see where it is on the 200. They've already broken below the 200. So you can see there's broke low and that continue that move down. If this happens as well, and if the larger index there continue to go lower, this breaks below the 200, you may have a lot of sellers here, even more sellers here on this Marathon Oil. So, but we're not seeing the prices at the pump come down that much. So this is kind of counterintuitive here. So, all right, that's pretty much all I have. Floor is open for any financial related or otherwise topics. Oh, before I do that, shameless plug. I finished this course, and pretty much you all know it, but if you need an in-depth deal for this, so this is three sub courses. So all of what we cover each week. So majority of you that have been here, but I know we got a few new members if they need to kind of go through to see how you get familiar with TradingView, look at a chart at its, basics points. So if you say, hey, if I kill everything on the chart, hide this. So it just talks about, what a candlestick is, what's the elements of a candlestick, then how to use TradingView, how to get your watch list set up, how to set your chart up, using the right candles as opposed to use like a bar chart or a line chart, how you navigate through looking up stocks, and then from there, how do you, and then I go through and I show like, the majority of the indicator, not the indicators, but the majority of the icons on this. So I go through this left-hand pane, this top row, the right-hand pane on the side, talk about the y-axis as price, left the x-axis as dates, talk a little bit about volume. So go through that. So it really gives a good understanding for somebody new that is looking at this, but a lot of you all have been around for a while, so you all kind of know how these charts and stuff work. One question, what do you all think about the idea that I just run the screen and you all start walking through the names and kind of going through it, and I just kind of guide the screen? Or do y'all think some of y'all are ready to take that step? And let me see who I got on so I can call on names, because I know y'all not gonna volunteer. So Brenda, would you be willing?
I'm sorry, what's the question? Sorry, the dog was.
Oh no, I'm saying, so if in some of these meetings, if I just start calling on some of these names and you walk us through and I just guide the screen share, would you be willing to do so?
Oh man, it's too early in the morning for me to be yakking.
So we got to know. All right. Okay. We'll get you from the 11 o'clock hour. We'll give you an hour to warm up. Okay. Right. Since, you know, you just want to bow out gracefully. It's not that easy. All right. Milt, what about you?
I don't know if that would be productive. The reason why is the way you do it, it keeps it flowing. If people come through and start hand hodding, everybody else is going to start going to sleep.
But I mean, I'm still here to help you. I'm not just going to leave you out to dry. but there's a reason why I'm suggesting this, because I've been, you know, a lot of you have been with me for a year or so now. So I do a lot of it, but I got to see if it's translating in what you all are doing, and are you all able to do it? Because one thing I encouraged all y'all to do is to find somebody that doesn't know this stuff and teach it to them. Because I've learned a lot by, you know, facilitating the meetings. And so, like, for instance, I'll just use this chart as an example. Before working with you all, I did not used to use trend lines, right? I just didn't. And I didn't wait. So number one, I didn't use them. But then another thing that I found once I started, so we'll take this one, for instance, right? So look at this downtrend. If I just trust the downtrend, I would not buy this stock until I get confirmation of the trend being broken to the right side of this downtrend. That's something I didn't know. I discovered this as a result of going through this with you all. So I use that as an example to say that there's a lot that you're going to learn just by walking through and explaining it to others. So that's really what I really want to take the next step with the group and getting us to a point where you all can be me and y'all can do this stuff. So that's the reason for the ask.
I volunteer, man. It just that my schedule is crazy.
Okay, thanks, Barry. Appreciate that. Yeah, and Barry, maybe one week we wanna see if you'll be willing to, because I know San, she's a new member and she's in a real estate game as well. She's a realtor. I know that you're a real estate investor, and so she was going to talk about doing the tax lien sales. And if you want to talk,
I was just dealing with that. One of my properties, one of the properties went into a tax sale because the property tax wasn't being paid by the bank.
Okay. Yeah. So if you all can do a real estate segment for us, and then we got Lorenzo Martin. He's on the loan origination side, so he writes loans. So I think we got a pretty good group here with some coverage on real estate that you all can talk about as well. So
yeah, that'll work.
Okay. Yep. But okay. So thanks, Barry, for volunteering. I'll call on you to walk us through some stuff. Milt, what about? Yes, ma'am.
So for my participation, what would be good is if maybe I go through something that I might have been thinking about during the week or done. So like, for example, like the Ollie's, then I could speak to what my thoughts were, what I did, what I didn't do. And that would work better for me, because then it'd be something specifically that maybe I had thought about during the week, or that I had action during the week, and then you guys can kind of give like, yay or nay, or had you thought of, or that sucked, whatever.
Right. So let's take that one as a quick example. Brandon, I'm gonna pick on you a little bit here. So let's
No
just say, hey, yes. So we go with Ollie and we just say, hey, I'll start with a blank chart, and I'll say, okay, tell me the points on this chart. Let's chart this up. Right. And so you say, okay, so just give me a price point here. We'll just walk through a quick example. Where would you say some support or resistance is on this
But
chart?
see here, you trying to get me to chit chat as in how you kind of technically
Well, but how would you?
analyze this bad boy, where me, I'm more of an eyeballer, and I agree, I should probably be a little bit more technical.
Well, how would you eyeball? I mean, give me your eyeball.
Okay, so
I can
like
go with that.
like for this guy, right?
Yes.
So you look at the where it was low there, what is that March, and then that secondary low there in June. So I took a look at those, and then
Okay.
my decision is like, okay, like you had said before, it's doing that little run up, but
Mhm.
yet it has gone so far in this period of time that
Mhm.
I'm not sure how much further it's gonna go, but I still wanted to play in it
Okay.
while it was on this nice little upstream, just to give me a little bit of some positive cash coming in.
Mm-hmm.
And so I got in early in the week, and then bailed a little bit later in the week just to pick up a couple of dollars. So see, that was my thinking on this
Okay.
bad boy.
Okay. But now, so given that, so we talked about this March and this June, and you say you're playing this run up and specifically this last week. So these last 5 bars, because we're on a daily chart, right? But what other support or resistance areas would you identify here just by eyeballing it?
So if I eyeball it, then I would look at, what is that?
Just
So
tell
you
me
got that little
left or
bar
right.
there in October guy, right? Yeah. So we blown past those. So until the next thing I'm looking at is that October.
Okay. October here.
Right. Exactly.
Okay. Got it.
And we're running up, and yeah, and there you go.
Okay. Run up to November.
Whatever that month is there.
Mm-hmm.
Right. So potential, but like I said, I'm just being a little bit cautious because we're still in an iffy scenario with the market. But while it was still moving up, then I'm taking advantage of.
Yeah. So let me add something here. So I heard this guy say that, and I've heard it before. I just never really taught it this way, but they say you can look for M's and W's. So let's just take that. So if we say, I didn't mean to draw that. Hold on, let me get out of here. So M's and W's. So let's just take our trend lines, right? So we just draw our trend lines here. And sorry. So I'll draw the downtrends from the top, the uptrends from the bottom, right? So how many M's and W's we see here? And some of them will be connected, obviously, the way that I'm drawing them, but. So M's and W's. And a little bit up, a little bit down. Okay. So if you look at that, you can say this is it's a V there. Really don't have the other side of that. It's another side of the V. And so if you say this is a funky looking W, but it is, right? So you just don't have the larger right side of that. But here you got more of a W here, right? And then going up, you got an M here. See that M? It's not symmetrical, but it's an M. And then you have this is ugly, but it's not quite an M. Well, yeah, it is. I just got a part that's hanging out. Let me undo that last one. Sorry, hold on 1 second here. Trying to pull that back. So you got this M right here. So you kind of got that M right here. So what happens is these M and Ws, what they really do is just really show the pivot points and reversals, right? So I can take all those blocks off and you can just see when you get down to the reversal point. So kind of what I look at is, so when we draw support and resistance, so kind of my first rule of order is this. So in terms of precedence, I go horizontal. I think I spelled it right. Horizontal support and resistance as kind of like my if you take what's the right word? Precedence, right? Horizontal support and resistance. Then I take trend lines. And again, moving averages, let's kind of depends. I'm not sure in terms of where I would rank moving averages, right? But let me kill this. So I look at horizontal, I trust horizontal support and resistance before I trust a trend line. And then I'll use trend secondly. So if you look at this, I'm looking at horizontal support and resistance. So I would say horizontal support and resistance is stronger than necessarily the trend lines, right? But trend lines kind of help me see where points occur. So I'll take these areas. So let's erase everything. So let's do the support and resistance. So again, we'll just go with the peaks. So I'll take this peak. All right. I'll take that bottom. I got this gap down, so I'll just take the bottom part here. Then I'll take this bottom, this bottom, this bottom. You kind of got it descending, trying to look where I have something else horizontal. I'll take this, I'll split the difference right here. I'll take those and I'll take this one, then I'll draw the absolute bottom here, right? So now in terms of peaks, I got this one, and this one, and I'll draw these three together. And I'll drop it somewhere in the middle here, right there. All right. So now I'm going to trust support there. So when I say I'm trusting horizontal support more, I'm trusting the horizontal support here. I'm trusting this horizontal support and resistance. So it's resistance here, but when I'm in this area, so a support if the price that you're currently looking at is below you. It's resistance when the price that you're currently looking at, if the line is above you, right? So I'm looking at these levels, kind of as my areas, right? In terms of I'm trusting those more. Now, when I overlay this with resistance or with trends, so you can see here, we're in a downtrend. So you draw the downtrends. All you need to draw a downtrend is 2 points on the chart, 2 points on a chart in terms of 2 candlesticks. So I'll just use 2 wicks. Now draw the downtrends from the top side, uptrends from the bottom side. So like I told you all before, I didn't know about this, but you can see here, and I'll draw it in another color. So if I take that and we take this, I'll give it this pink or whatever. This pink area, this is confirmation that downtrend is broken by this first green close here. So that's a confirmation point. So I can say, hey, that trend is broken. An uptrend has started. So I draw that from the bottom. I'll take that current bottom. I'll take this bottom and I'll just use the slope, right? So now that uptrend has started. So where did it break? It broke here. Here's the confirmation to the downside here. That's confirmation to the downside. Now I'm in a new downtrend. So if I go back here, got a really small downtrend, 2 bars. Then it starts this chop up, then got another downtrend. So this was just a fake out, this little pause here, but you can see the downtrend resumes there. And the downtrend continues. And actually the slope gets much more aggressive from here to here. And we don't get a confirmation until you get to this point. Sorry, wrong tool. Let me undo that. Oh, so undo bar is this little arrow here. So, all right. So here this. Now we get the confirmation right there. So kind of having these, again, I'm trusting the support, horizontal supports and resistance first, but in between support and resistance, I may use these confirmations here on these uptrends and downtrends. But when I get back up to a support and resistance line, I'll use those over the actual trend lines. So that's kind of the precedence that I look at. But again, and in all of these, just because you have a support level, you can see here the support level, we were thinking it was going to hold there, but it didn't. Thinking that was going to hold, it didn't. And we got all the way down to this area here, right? And so it got all the way back down to this previous area before it actually bounced. So it got there, it rejected, got up here to this resistance, came back again. And you can see here, this is our second leg down. And then this is that little area come up, right? So, so this is just, you know, a way to start, you know, kind of going through it. Now, you may not have all of this detail, but at a minimum, what I want you all to do is to be able to say, hey, can I draw support and resistance lines, right? And just looking at the peaks and the valleys, right? Or the peaks and the bottoms. So you can draw those support and resistance, and you should be able to start to identify a trend. And even if you just look at that, if without drawing anything, I can say I got support here at the 41 level. It's in a recent uptrend from May. I don't even have to draw a line to see that, but because you've kind of been trained in it, you can see. And so if I were to move this chart over to the left, you can see here, you can say, okay, we're in a downtrend, right? But if as I slowly move it to the right, you can say, oh, we're chopping around, we're kind of going sideways. Now, when it gets past this area here, you can say, oh, we broke out of this shelf area, and now we're in an uptrend that was confirmed starting from here. So you can see, you can kind of see how some of this stuff plays out. And that's the purpose of it, because at any point in time, we only have this last bar for where we, so if you say this is the last bar here, all of this previous stuff to the left is trying to give us context in terms of what is the stock going to do going forward based upon its past performance. That's why we use all of this stuff as clues to be able to help us, in addition to volume down below. Because sometimes volumes, you can see here, volume may accelerate a move, and sometimes volume may end a move, right? It's not one here, but you can see this move is here being accelerated with volume to the higher side. And you can see here at this point, volume kind of stopped this move going lower in this general area. So, but that's why I want you all to just kind of start talking about this to be able to say, hey, give me a chart. We started blank and you just guide me through. And I'll say, hey, yes, I agree with that, or no, I don't. And now charting is not an exact science. It's subjective. So just because I may have a line at a different point than you do, if you justify why you put it there versus another place, I'll be like, yeah, I can go with that. But again, the overall point is you just want to have approximations on the chart to see where your reversal points are going to come. Because that's really what we're really talking about, is reversal points. So if I just drew these without even drawing support and resistance, we just say, where did this thing reverse? And these are just your peaks and your valleys. So if I'm just drawing bottoms, all of these are reversal points. It reversed and went the other way. Reversed and went the other way. Reversed and went the other way. You see what I'm saying? So that's really all this charting stuff is about. And then when you start to line things up, you say, oh, it reversed here, reversed here, reversed here, and it got close here. So we say, oh, sounds like a support area, because that's where in that general area, that's where it bounced. So I want you all to, you know, we want to level up here and kind of get to this next area, because I want you all to be an extension and start teaching some of this stuff to somebody else. You know, y'all got kids, y'all got friends, y'all got family, and you may find one or two people that are interested in it, and just start, you know, sharing with them the knowledge that you've learned. That's how we're going to be able to grow, you know, kind of the financial literacy and understanding, you know, for people. All right. So thanks, Brenda, for being my guinea pig there, if you will. Appreciate it. So, Ann, is this overwhelming? Is this overwhelming?
Yeah.
A little bit. Okay. But we walk you through. I can send you a discount code for this course, and I can make it real affordable for you. But I go through each of these. I have videos, I show a PowerPoint presentation, and what it allow you to do is to kind of walk through it and go through it at your own pace. But a lot of what we covered here, I go through this as if you don't know anything, kind of from ground zero, such that it can bring you up to speed with it. So I hope it wasn't enough that scare you away. I hope you'll come back with us. I hope it wasn't enough so come back, and I'll put the link to these courses in I'll put it in the chat. Let me know if y'all get this without the link in the chat. You should. So it's a couple courses in there, and you can toggle between it. I think it's 2 courses in there. You can toggle between the 2. So this is just if you don't have a brokerage account and you need to set one up. That's what this first course is, and show you how to buy your first stock, but you require a brokerage account. The second course assumes that you have a brokerage account set up, but you don't know anything about charts and candlesticks, support and resistance, trend lines, and that stuff. And it'll walk you through that. But I just gave y'all like a quick overview of kind of those things and what we just talked about here. But it slows it down. It goes through a detailed description, has videos of this, me talking over it and walking you through and giving some detail on it. So hopefully that's helpful. If you find that you know of anybody that could benefit from using these, just send them the link, and I greatly appreciate it. And I know I showed Brenda just kind of like the process of going through and creating a course. So if anybody is interested in creating a course on your own subject matter, it doesn't even have to be stock related, but if you can do a screen capture of whatever it is that you're trying to demonstrate, I can show you how to walk through that course, to create your course, and to how you would record it on video and all of that stuff. So if anybody needs some detail on that, I can show people on that if they're interested. So just ping me if that's of any interest. Having said that, that's all I got for this week. Any other questions before we depart?
I just got a quick comment. I was bad. I bought some Chinese stocks. I'm going to sell it shortly. I bought NEO. I couldn't resist.
Which one?
NEO.
Oh, NEO. Okay, gotcha. Let's see. When did you get in, Milt?
I got it at 22 something.
Okay, 22. Okay, so that was this week.
Oh yeah, it was this week.
Okay, got it. Oh, I thought you was playing off of these lows. I was like, oh, this is got a double bottom here at this 13. Okay, but yeah.
You know how I feel about Chinese stock, but it was looking so good, I had to buy some. So.
Hey, well, you're up $2. Hey, do you do trailing stops? That's something I meant to ask you earlier in the week. Do you use trailing stops?
I do and I don't. I don't physically use them, but I mentally use them. And the reason why,
go ahead.
I believe that they try to hit your stops to knock you out of stocks. because most people use them and they all tend to set them at the same predictable point, and then they just drop the stock lower, knock you out, and then it starts going up again.
Yeah, I think that's true yes, I believe that is true. But I wonder, well, number one is how tight do you have it? And then two, what's the overall trend of the market? Where this past week, this market has been pretty strong. So if I say if you had a dollar trailing stop or maybe $2 trailing stop, they may not come down and get you that much. So even if you go back, and you could see it too, you look at this, if you do it on a 15-minute, you'll see if they'll come back and get you. Yeah, so if you were here, yeah, they had again, it was at 23.84, now 45. No, so that was like 80 cents. So no, that was 80 cents. What is this? This is I said 23.95. What's that? High to low? I can't do math that fast in my head. So it's like 60 cents. So no, they wouldn't have gotten you. So if you say, yeah, high to low, you're saying 23. Yeah. So no, they wouldn't have got you on a dollar move, Milk. You could have trailed that up a dollar. So I'm trying to look at a bigger one. What is that? High to low, you're saying 23 to 22. Yeah, you probably needed maybe a little bit more than a dollar here. But I get your sentiment though, for sure. I've used them at times and they've helped me in some ways. And I've gotten bitten in other cases where they were too tight and they came down and got me. So yeah, so I get it.
But don't worry, I'm getting out anyway. I feel dirty, so I gotta get out.
Yeah, why do you feel dirty? You made money on the trade.
It's Chinese money.
Come on, man. Hey.
I cannot trust their stock market. I shouldn't have got in, but it was just too tempting.
Okay.
I saw it was quick, easy money.
Okay. Hey, take it. Good stuff. What was that earlier one that we were talking about? Snowflake. Yeah, we hadn't talked about that one. You want to talk about that a bit?
I know it's getting about time for everybody to leave,
Yeah.
but really quickly, the reason I got into this is because of Chatter. Remember, I think I told y'all before about one of the things. I listen to a lot of people because I want to know what is the it stock. What do people like to talk about? And this is one of the it stocks.
Okay.
I mean, this was an easy trade for me to make.
Mhm.
If we were not in a bear market, I would still be in it.
Okay.
And probably to fill that gap up there. That's one of the things I look at, gaps up and down. When I see a stock gap up, that's just that's gap up with volume. Let me just put that in there. That's a show of strength that I like to follow.
Okay.
Now,
Okay.
this one, I'm pretty sure it's going to go up next week, but boy, this is normally when I tap out, regardless of a stock, because the way it just shoot up like that. I tend to miss a lot of money by doing that, but it's safer for me to do it. We're in a bear market.
Well, I'm sorry. Continue. I'm sorry. I didn't mean to interrupt.
I was just going to say we were in a bear market. That's why I got out of this. Normally, I would not have. I would ride it a little bit more.
Okay. One question. When you get out, do you get out all at once or do you scale out?
It depends on how much money I make. I only tend to scale out of stocks when I have made a lot of money and I see it's going up. And I want to get my original out of there at the very least.
Okay.
So when I have big movers, I always scale out. I always take some off.
Okay. All right. Got it. So just looking here, I see these reversal points on the downside, and these are reversal points on the top side. So definitely see these here. So it's gonna be interesting to see what happened at 164 and then again at 198 if it gets that far. Yeah. But definitely good entry at this one, anywhere just 112 to 115, 117. Yeah, for sure. Well, thanks everybody. I appreciate it. And we'll start calling on some names in future sessions. Because again, I want you all to start getting your charting capability down and to be able to get your analysis. And two, you know, we're going to start talking a little bit more about, you know, what kind of like what Brenda was saying. What did she do in a particular name, you know, in the past week, if you've had any trading activity? And if you're just adding to your position or scaling out a position, we want to know that as well, because we want to understand the thought process, because as we share that, each of us can learn from another in terms of how we arrived at a particular decision. And sometimes decisions are, you know, they work in our favor. Sometimes they go against us, and that's fine. It's still just the experience, right? So if no other comments, we'll stop it here. Thanks everybody for their, go ahead, Brenda.
No, you went silent for a minute there, but I thought it was just my phone.
Oh yeah, no, it probably was me. My internet's jacked up. We're switching internet services next week, so hopefully this will be the last week where we get the spotty server. I got Charter, and Charter has been acting crazy. The last Spectrum Charter, same thing, but it's been acting crazy the last 2 weeks. So they actually put fiber in our neighborhood recently, so we're going to fiber. So hopefully by next week we'll have a little bit better response. That's the hope. So hopefully we won't have any more glitches. All right. And if you want to hang out, you and Santrice, if you got any other questions, I can.
Oh,
you know.
I did. This is Santrice. Can you hear me?
Yes, ma'am, I can.
Oh, I was. Milton had mentioned earlier about discussing some retirement. I was wondering if he had any feedback on that. You want to share anything on that?
Yep. Milk.
Okay. That retirement is hard because you have got to look at, let's start off with is life expectancy. I know you guys may not believe this, but anybody that's on this call that does not have something systemic like high blood pressure or diabetes will more than likely see 90s. And you will see a very healthy 90. So why do I start off with life expectancy? It's because when you retire, your money needs to be there at the end of your life. You don't necessarily have to have more, but if you are all of a sudden living out Social Security, which is you think Social Security is going to stay at the same high level when you retire, I will hate to give you to be the bearer of bad news. It cannot sustain that. Unfortunately, my generation, who are the baby boomers, we're going to suck that baby dry pretty good. So you will probably be getting 70 cents on the dollar and maybe less. That's not me trying to predict the future or anything. That's me knowing the baby boomers coming through, and Congress have not changed anything to make way for them. We're called the goat and the boa. It's just like when you see a boa constrictor consume one of these big animals, you can see it move through its body. It makes sort of like a bell-shaped curve. That is the baby boomers. So as we're hitting retirement age, we're going to be taking more and more resources out of Social Security. People keep saying it's not going to go bankrupt. But what is going to happen is on the working people, their taxes is going to go up. On the people who are getting benefits, nothing's going to happen because we have most of the voting power. We're not going to let it happen. I just be frank about it. You're not going to cut my Social Security where I'm in the majority. So you poor working people who are in the minority will have to pay for me. I'm sorry about that, but that's just the way it is. And by the way, that is not a joke. I promise you, older people, we vote more. That's why we have the power. We vote, and all those politicians know they can talk anything they want. They know that they can get voted out of office if they mess with Social Security. And that's one of the reasons that you see it's getting into the predicament it is. It's one of those hot wire issues that can get you thrown out of office. If they did recall for Congress, even talking about it, could probably get you recalled and kicked out of office. So that is just the general knowledge of it. Now, in the specifics of retirement, before you retire, you have got to make a plan. And when I said before, I'm talking about 5 to 10 years out. You have to make a plan to see if are you going to retire and how you're going to retire. Once you get 62, you need to retire on Social Security, and I think it's probably make around 1,000 or something, depending on what your work has been. For most people, if you can actually live off that. But I have a feeling that there's no one on this call that wants to live at that level. So how do you get better? It's your 401k. It is your real estate, because that's how Americans get rich. Those are unless you start a business, those are the two ways Americans get rich. So it's sort of like right now, I don't care how far it is, you should already start coming into play. What is my plan? The first thing in your mind before anything is figure out what your life expectancy is. People don't like to do that because they think it's morbid, but you have got to know what is your life expectancy. And then what I would do is I add 5 to 10 years on there, depending on what your current health is. Because medicine is getting really strange now. There was a study they came out with recently where it was a really small study where they cured cancer for everybody in that study. I don't think that's gonna be mainstream for quite a few years, but it's gonna be in just about everybody on this call lifespan. So one of the things that ends people's life is cancer. The older you get, the more likely you are to get it. So if they have a cure for it in general, then that's going to boost life expectancy up. They're also coming up with different type of life expanding things that will make your life as you get older better. You may not have even noticed, but you at your same age, you're probably healthier than your mother or father. And that's thanks to nutrition and modern medicine. Our technology is helping us live better and longer. Also, as you get older, like your parents may have to get their knees operated on, things like that. Over time, those things are going to get better. There are different things that they're looking at that one day you may not even need a knee operation when all the cartilage in your knee is gone. So you're going to be living older and you're going to be living a better older. So when you get into your 80s, you may not be ready for the retirement home. You may be ready for that trip to Europe, the trip to Asia, something along that line. So how are you going to pay for that? And that's where your retirement come in there. I don't want to get overly long. I just wanted to go with just the brief basics. But there are various tools that you do for retirement. Most people do not hire a financial manager for their money, financial planner, I should say, for their money. But if you are not going to be one for yourself, I would highly suggest you hire one. If you're going to do it yourself, then you have a lot of stuff you have to study. You literally have to become a financial planner. And that's also well. You get some for the rest of the when you're in the money, and what your lifespan, I can 90 is going to be the new